at them kind of mortgage data, it's around 44% applicants are self-employed. So it's a good chunk of business for the lenders, and lenders need self-employed people. So obviously it's not true. You're still able it's possible to get a mortgage, but being self-employed just means lenders need more evidence of consistency in your income. So many lenders will actually specialize in self-employed applications. As a general rule, majority of lenders will ask for the last 2 years worth of accounts. So 2 years tax returns with tax year reviews. Again, it's a little bit more complex, but more flexible as well if you've got limited company, because the lenders will ask for your director's salary and then again the dividends. Now, I've got lots of obviously clients saying, but actually on the payroll, I'm employed. I'm going to send you my pay slips. But if you've got more than 20% shares in the company, you will be assessed based on the self-employment criteria. And then again, as I've mentioned before, this criteria is different lender by lender. So majority, as I've mentioned, majority lenders will ask for the last 2 years and they will take director salary and dividends. Some of lenders will look actually deep inside your limited company accounts and they will take the net profit, some of them before taxation, but some of them before taxation.
Brilliant.
So overall, the income will be much higher. Again, if it's not enough, but then again, it's down to the experience of the person you're speaking with. We're looking into, do we have any pension deductions? Are we able to take them into affordability? How about van expenses? How about using your own office? Are we able to remove from expenses and increase affordability as well? So those are very crucial elements, may make obviously huge impact on affordability. Of course, obviously on the other side, we do have lenders accepting 1 year accounts. So especially when the borrower has a strong track record in the industry. So we can imagine someone was employed, built obviously experience, the bank of clients, and now went on own, opening, but it's a sole trader limited company. Doesn't mean necessarily have a 2 years worth of accounts, but we can actually present a strong track records. We're able to use only 1 year account, so we're able to back up the figures with the business bank statements, with maybe obviously projections for the next year, a letter from accountant that can be also approved by high street lenders before we approach small specialist lenders when it comes to the affordability. But the crucial element, especially when it comes to the London area, we always have to ask the question, what was the reason why you went self-employed? Yes. And sometimes you may think that, oh, actually, I'm a daily rate contractor. So that's completely changing the perspective of our assessment. We're able to put the limited company on the site and look into the gross contract. So take the gross daily rate for affordability. Again, you may then obviously pay via limited company and umbrella, slightly different calculations. But majority of the lenders will use 12 months gross a daily rate, 46 weeks, 48 weeks. Such a massive difference in affordability. Yes. Again, quite important maybe obviously for us, because majority of our obviously probably friends and families work in construction. Yes, and majority of them, I would say 99%, are CIS subcontractors. So obviously the 20% is deducted of the source immediately on our invoices. Again, we still need to go through a tax assessment, but we do have lenders, high street lenders, who would again put tax returns on the side, but they will look into your last 3 months invoices and they will actually take the gross salary before taxation. So it's in essence, you treat us as employed, because I don't really care about your expenses. We tend to have, if you've got obviously a good accountant, to put ticket expenses, petrol expenses, tools expenses, and then obviously this is our net profit. But then again, with the CIS subcontractors, it's the gross salary before 20% deduction, and we can average in the last, obviously, 3 months. Again, we can take 48 weeks, 46 weeks, or 12 months, but it's a huge difference when it comes to affordability. In average, we're able to get around £60,000 more. So it's a huge difference when it comes to the market, especially London market. And again, if you're speaking with, Nationwide, for instance, order your CIS subcontractor, they will ask you for tax returns, and they will average the last 2 years. But then again, if you go to Halifax, NatWest, or other lenders, they may have completely different calculation. Your affordability will increase. And again, if you, as I said, speaking directly with the lender who does have completely different criteria, or perhaps you're speaking with unexperienced mortgage advisor who by all means may not know what is a CIS subcontracting job or daily rate contracting, you're losing a possibility and opportunity to purchase your first house sooner than later. So again, I strongly encourage to have that initial conversation, to send all the documents and see exactly where you are. What needs to, what is your affordability? Because again, being self-employed doesn't mean it's complex. A couple of weeks ago, I had a client who is a taxi driver. So obviously, we needed to take tax returns, but he purchased a taxi. Obviously, the black taxi is quite expensive. We're thinking about £120,000. So that was shifted into the personal credit, and it's showing as a personal commitment. Majority of the lenders will take £700 per month as obviously your credit commitment, and it will have a huge impact on affordability. But there are lenders who will look into your tax returns. They will see that it's offset as expense, and some of the lenders will actually disregard this personal commitment because it's in relation to the business. And our affordability increased quite substantially by £210,000. In London, it's a game changer.